Hey traders, the brew is back. Welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. Missed you all for those couple of days. Glad to have met a lot of you in Austin at our Simpler Trading Mentorship. Caught a lot of you on the live stream, which was awesome. And we're back to our schedule. So great to see everybody. And let's take a look at what is going on in these markets. Before we even get there, let's talk about what we're dealing with today. All right. Yesterday we had the CPI, which was really interesting in that when the number came out, 0.2 less than the expected year over year. I think we printed a 7.1 versus 7.3 expectation. What was interesting is that the remainder of the session, yesterday's Tuesday session, we sold off. We took back a lot of those equity gains. But what was interesting is bonds, and I'm looking off the bond chart here, bonds did not sell off as much. We had a really pronounced disconnect between equities and yields. And those are always going to drive me to considering, do I want to continue to trade the indices or do I need to pivot? Now, if you're not sure what that means to your trading, your day trading specifically, check out the free video that's posted at the Simpler Trading YouTube channel. And what was it called? I don't remember what the title was. There it is. How to pivot on a volatile morning. And what is volatility? What's the kind of volatility that would cause me to pivot? And the volatility where indices sell off, but the bond market stays pretty steady relative to the weakness in stocks. That's something that I definitely keep an eye on. You can catch that right here at the Simpler Trading YouTube channel. And the other thing that we have, just a small thing, just a tiny, tiny little thing on the calendar today, and that is the FOMC. If we take a look at where we sit in front of today's 2 p.m. FOMC, it's not about December. It's not even really about February. Where are we projected to be come March? Where are we projected to be come May? And it looks like, based on that CPI yesterday, expectations have moved to a less hawkish target rate of 4.75% to 5% in lieu of the 5% to 5.25% column. As long as we're in these two, as long as these two columns are the ones in play, not the 4.5% to 4.75%, and not even the 5.25% to 5.5%. That's too high, and 4.5% to 4.75% is too low. As long as we're sitting between where we are right now, one of these two columns, the Federal Reserve does not have to course correct us very much, and I would not be bullish bonds and bullish indices without this kind of clarity and consistency in where we are likely to be come May of next year. All right, so that's what we know, right? That's what we can measure, right? Knowing and measuring might as well be the same thing for us in trading. What do we see? What can we measure? And that's what I know, and that's what I can measure going into today's 2 p.m. Eastern event. All right, so let's get to it. I see the questions coming in. So great to see you all, as always. All right, so let's get to it. First up is, let's see here. Let me get the chart out of the way. Welcome back. We missed you. I was going into withdrawal. Yeah, I'll tell you what, gang, I really do enjoy doing this as well. I really do. It's really a part of my trading day, and I appreciate that. Yes, meeting a lot of you in Austin and hanging out with the crew from the mothership was great. All right, so let's thank you. I appreciate it. All right, Prince asks, have charts. Coffee, good morning, welcome back. Thank you. All right, if buying a contract on all three triggers exceeds the risk I'm allowed to take, does that mean go for less triggers or skip the entire trade? Right. Great question. So couple basics. for those of you that are not familiar with the way that I alert trades out in the futures room or sector secrets mastery, aggro, moderate, conservative, scale in, scale in, scale in. All right. If all three entries are cost prohibitive, risk prohibitive, kind of the same thing, really, with the way that I teach the holy grail of risk management and position sizing, go with a moderate and conservative, or go with conservative only. I don't believe the entire trade has to be skipped. Perhaps the aggro trigger entry, perhaps the moderate trigger entry. And so choose which one or two of the three would work, and then continue on with the trade, right? Pick some triggers and carry on. All right. Okay. Next up, I'm glad to be back, Sam. Did I have any barbecue? I did not leave our little area of the mentorship, but when you land in at the airport in Austin, they do have a Salt Lick, and yes, I had barbecue for breakfast when I landed. I did. All right. Next up is I'm getting hungry now. Now I'm starting to get distracted. Hey there, editor. Is Amazon? Let's go take a look. Is Amazon at a price level to buy shares for longer for a longer term or long position? Oh, for a long position. Okay. No, I cannot buy editor in a red. Look at the trend. It's been red since the 1st of November, over a month now, just over a month now. And so, no, I cannot. I cannot on the daily and I cannot on the weekly. So, if there's going to be something I can do, it's going to be something rather different than a daily swing or a weekly position. Uh, and I'm not doing a lot yet because I don't have a way that I have tested from an automated standpoint where I could say, here's a 30-minute or 60-minute setup that I know has a consistent win rate and automated levels. So for now, the answer is editor, yeah, for now, no. In fact, some of the worst performing corners of the market that are the biggest names are Tesla and Amazon. I would actually expect more weakness out of those two as we go into the end of the year. End of year phenomena is, for me, probability wise. Strong names are going to benefit from window dressing. Weaker names are probably going to benefit or not benefit, right? Are going to be subjected to tax loss harvesting. So strong gets stronger, weak gets weaker. And it makes a lot of sense as to why, because traders tend to keep performers on their in their portfolio and they want to dump the underperformers, which funny enough, considering retail traders also like to sell near lows and buy near highs, you got to wonder the logic. That quickly starts to become a very different attitude come mid-January to mid-February, where if I'm managing money, I don't want to buy, say, the Dow at a new high necessarily. I don't want to buy healthcare XLV at a new high. I do want to start going to go bargain hunting. I do want to start going shopping in places where I think uh, that certain names have been beaten up enough that there's upside if those names play catch up to the outperformers. So there's that thinking, but we won't see that till next year. All right. Next up, did I enjoy Texas? Captain, I sure did. Always do. Always do. Tommy, thank you. Ditto. Ditto. All right. Mr. Walker, crude oil. You got it. Crude oil and healthcare. Sure. I'm looking at crude oil. Structure dictates strategy. What do we have? We have crude oil in a downtrend, red trend, lots of red grab candles. I'd like to short a, uh, I'd like to consider a short. A lot of what's going to happen, by the way, gang, we have the US central bank speaking today. Think about crude oil as having a central bank. Think of crude oil as a currency, and the central bank is OPEC. And if OPEC decides to increase production, which is being talked about a little bit, I don't think it's really necessarily factored in quite yet, but we can check. Okay, so once we have the next OPEC meeting, we can start speculating on what we're expecting. And we've already had the December 2 OPEC meeting, and once we have the next schedule, we can start speculating on what's going to happen with production output. Uh, we're going to need production output to decrease to help crude out, or we're going to need demand to increase. So I'm not seeing a buy yet. All right. But that's the opposite of healthcare, though, Mr. Walker. That's the opposite of healthcare. And that's because healthcare right now is arguably one of the strongest, and not really that arguably, of the major sectors that are weighted in the averages. Healthcare is the strongest. It's arguably gone parabolic, as where price is right now is established enough distance between current price and the mean to say we might be 1.5 or 2x. And at that point, I start to look at the daily price movement range on XLV and say, hey, I want to be long, but I also realize it's gone fairly probably, it's gone actually. What happens here, let me explain real quick. If you're looking at healthcare, you're saying, Rog, is this an uptrend? Yes. But is it an accelerated uptrend? Is it a parabolic uptrend? Yes. And what happens is the possibility of a deeper, say, mean reversion or retracement becomes a little bit less, because when a market starts to go in runaway mode, the least bit of weakness starts to entice bargain hunters, starts to entice buyers in a way that you won't see in parabolic, with these over accelerated markets. You might say, okay, Rog, how do we know it's over accelerated? That goes back to volatility. And that's why I say when the mean reversion needs more than 2 of the daily price movement ranges to close that distance, I'm parabolic. So be bullish, but also maybe a little bit more aggressive. All right. All right. Next up, Captain Jane asks, on my Trendalorian, yes, what technicals trigger the arrows? Trendalorian is looking at price, it's looking at volume. And when price and volume interact in a way that suggests momentum from a volume perspective, that's when it turns on. And it's not necessarily always an entry signal. Sometimes, how often have we been in a trade, right? How often, Captain Jane, have you been in a trade and you're asking yourself, when is it going to wake up? When is it going to get moving? I've asked myself that as well. And that's what Trendalorian does. This is the way for you Mandalorian fans. And that's what I was looking for. I was looking for an indicator that would not simply look at price, but would look at price and volume and say, it's waking up. And that's what it does. It looks at price and volume. All right. Next up is, hey there, Peter. My morning coffee was incomplete. When I was, yeah, same here, Peter. When I was away on Monday, I had 4 cappuccinos, and the barista there accidentally gave me a double for my very last and 4th cup. I did the math on the caffeine that I took in that Monday, and it was a pretty horrifying number. At some point, I probably exceeded 600 milligrams, and it was a little scary. I think I was also seeing through walls and maybe reading people's minds. But I hear you. I'm much more a responsible coffee drinker when I'm with you all. So, all right. Next up, Marcel, what do I think about LMT or NOC for a bullish trade? LMT, absolutely by the dip, reminiscent of what we saw November 14, November 15, that kind of pullback. And we're seeing that now as we go into the 13th. So again, think about strength benefiting from window dressing, NOC, same group, right? But I would say no, right? On NOC, I would say if watch this building is sort of the art/science of finding the best of breed within a group, LMT is better than NOC. NOC might play catch up, but the problem is because it's not in a trend and it has been quite volatile, what's the journey to the upside? Yes, it could continue to move with a rising tide, but I would not want to presume that. And I think presuming that LMT reverts to the mean, which is the wave for me, and then moves higher, is a little bit more of a probability than hoping CHOP organizes and starts moving higher. But I would look also, Marcel, I would look at other stocks within defense and aerospace and ask yourself, is LMT the best? Or are there more? Are there more opportunities in that group where you can extend the list past LMT, but not necessarily to choppy bullish markets like NOC? So prioritize LMC in stocks that look structurally like LMC. So I hope that makes sense. All right. Next up, Prince asks on the question about scaling in, can I choose agro and conservative? Sure. Again, crunch the numbers. And that's really up to you. But sure, we have some traders that will go agro conservative and forego moderate. We have other traders that will forego agro and go with moderate and conservative. We have some traders that go all in on moderate, right? You have the choices. So yes, that is fine. All right, next up, GDX. Green. Yep, I like it. Similar to where Marcel was, Steven. So yeah, I do like that in terms of, we have a trend. So then I would advise a lot of the same thing. If I look at GDX and I start asking myself, do I want to go tide or boat? Now, what does that even mean? Well, if I'm looking at this group of gold miners, and by the way, GDX, um, SLX, XME are all on my radar. And where did I just put that chart? Hang on, gang. Where is it? No, I lost my chart. Where did it go? I was looking for my multi-chart. Oh gosh. So what I wanted to show you was the GDX multi-chart. No worries. The idea here with GDX is that it's going to make me a little crazy. Oh, there it is. Haha. Okay, there we go. What else looks good in GDX? GOLD, FNV. So if more rather than less of the stocks within this within this overall group look good, GDX is a great representation of all of them. And you might want to choose some of the liquid individual stocks within it. But I like GDX a lot. And that's one of the cool things about having the fluency of sectors, having the fluency of understanding the way certain stocks, by way of these groupings in these sector related ETFs, we have a much higher understanding probability of how they're going to move because they are affecting each other like a school of fish. Yes. All right. BBY. It's gone green. Sure, it's gone green. And keep an eye if you are going to buy a dip here, say around 80 or just below 80 on this one, Stephen, keep an eye on say 96.80 as an upside target. Yeah, keep an eye on that one. All right. What are my thoughts on the Russell? Tell you what, Navi, I do not trade the Russell that often, to be quite frank. I don't. And one of the reasons I don't is it tends to do its own thing. And not that there's anything wrong with that. Not that there's anything at all wrong with a symbol doing its own thing. But the structure here isn't great. It isn't. I think if I'm going to focus on any of the indices, Navi, Dow, S&P, NASDAQ, Russell, Dow. After Dow, S&P. But I do know that I have found that my Russell trading, whether that be end of day or whether that be intraday, my Russell trading, I don't do it that often, so I want to make sure it's super clear. I don't trade Russell a lot, but I find that Russell is a higher probability trade for me when it's moving with the Dow, and it's not right now. So then it goes back to which index of the four, we want to include Russell in that group, do I want to focus on? And it is going to be Dow. It is going to be Dow. So right now, my thoughts on Russell are just no for now. Just no for now. I also like, by the way, Navi, when I look at Russell, I like to look at KRE. That's something that we do in the mastery. If we're going to start looking at Russell, I want clarity. I want clarity in KRE. Yeah, no doubt. All right, Kim, I appreciate that. Good to be back. Thank you. CORN for a long put. I'll tell you what, corn was something I had my eye on. I'm going to look at ZC because ZC Off-Road Bear is what's going to map to the CORN for me. And that's just a big cup of nope, unfortunately, right now, because it has gone into a downtrend. Okay. It has gone into a downtrend. All right, gang. As always, sorry. Last questions. What's the setting on the VWAP max? There are a number of settings, my friend. So what I would say is take a look at the documentation around the indicator, and whether it's intraday or end of day, I'm not sure which one you're looking at, but it's all in the documentation for the indicator. Or if you just took the class, check out the slide deck. I walk through the different choices that you have depending upon your needs for understanding what volume levels are in terms of intraday versus end of day, what they mean to us by way of support and resistance, what we actually need to study by way of support and resistance. So check that out. Thank you for the question. And as always, gang, thank you so much for joining me for Charts and Coffee. Time to jump into the Sector Secrets Mastery Room. If you haven't checked out what we're doing there, please do. You can check it out over at sectorsecrets.com. All right, gang, be good to each other. I'll see you tomorrow.